welcome. You're watching Business Plus. If you are planning to take a trip abroad, you will now have to pay a lot more TCS or tax collected at source. Come July 2023, be ready to pay up to 20% tax on booking overseas travel packages. The budget 2023 has increased the tax collection at source TCS rate for foreign remittances under the Liberalised Remittance Scheme (LRS) from 5% to 20%. What this means is that remittances for booking overseas travel packages will now rise from existing 5% to a whopping 20%. Except, of course, for education and medical purposes, there's a separate slab for that. The enhanced scope of TDS and TCS means that the government will be making a lot more money on the back of tax collected from people who are making overseas investment, taking international travel routes, and also transacting internationally. But imagine this, a salaried employee is already paying income tax and is going to suffer again a 20% tax for spending money abroad. How fair is this? We are going to discuss that and a lot more. Joining us at this point in time is Gautam Nayak, who is an expert and will be taking us through all the details that are coming in as far as TCS, which will be applicable from July, is concerned. Also with me in the studio is my colleague Kartik. Kartik, coming to you first, it sort of is a double whammy for a person who's already paying tax and then going abroad and paying additional.
Absolutely. So, Shweta, why was the concept of LRS really introduced? It was introduced back in 2003 as a limit on the amount of money that an individual can remit outside of India. And that limit has been set at $250,000 US. So any equivalent of that is what you can legally remit outside of the shores of India. Now, this money, of course, can be remitted in any form. There could be travel, tourism, which straight away comes to mind. It could be remitted for, let's say, education purposes, healthcare purposes, or let's say you have a family member who is abroad and as charity or as donation or as help to a person you know outside of India, you can remit this money. Up until now, of course, the TCS, the tax collected at source, was limited at 5%. Now the rules from 1st of July, as I understand, are changing, and this, of course, was mentioned briefly by the finance minister in the budget speech, but the details of which are now coming out suggest that this 5% is now 20%. So an example would be, let's say you want to travel abroad for a holiday and you want to convert some foreign exchange. You want to buy US dollars at the airport. Now, when you write a check or you swipe your card for, let's say, 1 lakh rupees equivalent worth of dollars, there is straight away going to be a 20% cut on that 1 lakh. So 20,000 rupees straight away goes to the government as tax collected at source. Okay. And the conversion happens on the balance 80,000 rupees. So obviously for you as an individual, it's a big hit. Now, of course, if you are a tax paying citizen, and I'm assuming you are like many of us, if you're a tax-paying citizen, obviously, when you file your tax returns the next year, this tax which has been filed already, which has been collected by the government, could be refunded back to you if, overall looking at your financial statement. But yeah, it becomes a sort of, pre-tax that you already offer to the government. And it stays with the government till as long as you file your returns, and when applicable, it comes back to you.
Which is approximately a year.
Depends on when you're traveling. So if you're traveling on 1st of July this year, you pay this 20,000 rupees, given the 1 lakh example that I just gave you, you pay this 20,000 to the government today and on the 1st of July, and you file your return maybe on the 31st of July the next year, which is usually the date. You file your returns on the 31st of July, and if there is a credit note due by the government to you, then this 20,000 comes back along with the rest of your refunds, which could take anywhere between a month to 3 months or so.
Okay, interesting there.
So about 15 months roughly if you travel on the 1st of July. If you travel, let's say, in the month of March, then again you file your returns on the 31st of July, and it comes down to maybe about 6 months. Okay.
Gautam is also with us. Gautam, what do the new changes in TCS mean for people who are aspiring to travel abroad or making overseas investment? We just heard Kartik talking about sort of a double whammy for an average person who's already made he's tax outgo and has already given some sort of TDS, and then again when they're planning to go abroad, taking a tour, on the package that they're going to pay additional TCS of 20% seems like too much for an average person.
See, Shweta, the way I look at it is that it's a additional cash flow outflow for the person. That today, when you book your tour or you make a foreign payment, you're paying an extra 20%. So if your package would normally have cost you ₹1,00,000, you would end up paying 1,20,000, and 20,000 is the tax which is blocked up with the government. As Kartik mentioned, it's until you file your return, you get it back. So the problem really is this, that today, if my, say for instance, if I'm taking a tour which costs, for my family, I'm spending 5 lakh rupees, maybe ₹1,00,000 would be deducted, would be collected by way of TCS in addition to that 5 lakh. So I would first have to find funds for that 6 lakhs. Secondly, on that 1 lakh, my advance tax liability, particularly for a salaried employee, my advance tax liability may be 10,000 or 15,000 on my other income. So for the remaining 85,000, I really have to wait for at least a year, or maybe 6-7 months at the minimum. And the worst part of this is that today, on TDS or TCS, if you've paid if there's an excess TDS or TCS and you get a refund, the interest which the government will pay you will only be from 1st of April following the end of that year. So therefore, instance, you made the payment for a travel package in the month of July, the example which Kartik gave, you paid in July for that package. The TCS was collected at that point of time, you paid ₹1,00,000 at that point of time. Now that ₹1,00,000, you would get interest from it only from April of next year till the date that you get your refund. So your money is stuck. You will not have that money with you. You have to find ways to finance that immediately. And, the worst part is that for the money that you've given the government, which is, you do get interest only for a shorter period of time. That's the whole problem.
Okay. And since you're a personal finance guy, Kartik, if I were to have this money invested in an FD, I would get better returns.
Yeah, so let's say a 1-year FD today, practically every private sector bank is offering you about 7% interest rate. So I want to ask Gautam, what is the kind of interest calculation that the government does?
They will give you 6% from April till the date that you get your refund. So lower than a bank fixed deposit rate.
So if you travel on the 1st of July this year, you could have got, let's say, a 7% per annum interest as way of investing that money in a fixed deposit for a period of 1.5 years, whereas in this case you get a 6% interest for maybe as little as a 6-month horizon and not a 1.5 year horizon. Is that right?
That's right.
Okay.
That's right. So in effect, what you're doing is you're giving an interest-free loan to the government, which the government is paying you interest only for the part of the period, and that too at a rate lower than the FD rates.
Okay.
So Gautam, why don't you help us understand here, what is this total volume? I think you've run some numbers. What is the volume of total remittances that go out from India, and how much does the government actually create as an interest-free corpus for itself?
The refunds, if you look at the refunds were around 3 trillion rupees last year. And, if you see, the refunds went up by almost 59% as compared to the earlier year. So that's an indication that the TDS and TCS which is being collected is far more than the amount which is warranted. So that's one indication which is there. Further, from this TCS which is now brought in, will further increase the refunds which will be due, I'm sure, because, see, as I said, salaried employee will be the worst hit because they're the people where TDS is deducted in any case on their salaries. Their other income, the tax isn't enough to absorb this TCS. If I'm a professional, I can easily absorb it against my advance tax liability. I just pay less advance tax. So the amounts involved are, as I said, the refunds is around 3 trillion. Now, how much of that is due to this TDS, TCS, etc.? The broad numbers are not available. I think it's not in the public domain. But one of the things is what you have to remember is, earlier there was also a 7 lakh limit which was there for all other remittances. So today, say, look at this TCS situation. It was only for overseas tour packages. So therefore, if I book the overseas tour package, which could be only hotel and accommodation, or it could be include the air ticket plus the hotel accommodation. In that situation, there was a TCS. So if I could book the air ticket myself and I booked the just the hotel stay separately, etc., then it was not a booking of an overseas tour package. I could avoid that TCS. Now the worst part is that all remittances under LRS would be subject to the TCS, irrespective of the quantum involved. That 7 lakh limit would not apply. Of course, it didn't apply to overseas tour package last year as well. But now so today, let me give you an example. I mean, you subscribe to Apple iTunes. You pay something, which is really part of your LRS remittance because it's you're paying it in foreign currency really. So therefore, on that also there will be a TCS. I'm saying that there are so many small payments. I subscribe to the Economist magazine, and there will be a TCS on that as well, because it's ultimately being paid in foreign exchange. It's part of my LRS limit. So that's where the scope is much wider. It's tours is one part of it. It's
So
much
just to
wider.
clarify this point, if I were to book my ticket myself, I wouldn't be paying any TCS. Is that correct?
No, that's right. Because see, so far as tickets are concerned, you don't take that in foreign exchange, and therefore there will not be, and that's not part of your LRS limit. The LRS limit applies where you're taking foreign exchange, where you're utilizing foreign exchange. And for a ticket, whether you book it with an Indian airline or a foreign airline, there is no foreign exchange payment so far as the resident Indian is concerned.
Okay. What's the rationale behind increasing the TCS limit from 5% to 20%? If the government comes out and says the only reason we need to widen our base for TCS and TDS is because we want more and more people who are evading taxes to come within the tax bracket. But in this case, a whopping jump from 5% to 20%.
No, Shweta, see, if I can track with 20%, I can as well track with 5%.
That's
I'm getting
right.
the same details. That's right. So there's no logic to that. Frankly speaking, I think there is a little bit more to it that meets the eye. You know, there are two things. One is that the government is getting an additional float money for which they don't have to pay any interest. So therefore, it helps tide over the fiscal situation. That's one angle. The second angle, and which possibly also could be that, particularly so far as LRS payments are concerned, is, as you know, that the rupee has fallen against the dollar in recent times. We've seen almost a 10% drop in the rupee vis-a-vis the dollar. From 75, it's gone up to 82 or so. So maybe the government wants to discourage people from spending in foreign exchange so that it conserves its foreign exchange reserves. That may be one of the reasons behind this.
So do you see, Gautam, this also sort of tying in with government promoting tourism within India? Do you see this with foreign universities setting up shop in India? Overall, do you think this discouragement has got to do a little beyond economics and more society and social sort of equilibrium to be maintained in India rather than abroad?
Well, I think really it is to some extent economics, I mean, which is driving the government. I don't think really, if you look at it from a social perspective, I don't think that's it's not to encourage tourism within India. I would say that it's more to discourage people because, you know, the very fact that they brought all RRS under the scope and without the limit of 7 crore, and that, 7 lakh, that really demonstrates that the intention is that they don't want to encourage people to use foreign exchange. That seems to be the intention very clearly. And at the same time, the government gets the benefit of an additional float.
Okay. And what about themes like education and healthcare? And these happen to be fairly large chunks that account for the remittances that individuals make for the family studying abroad or for, let's say, any emergency healthcare service that arises which needs treatment internationally. Is this 20% applicable in those scenarios as well?
No, I think fortunately they have a concessional rates there for medical and education. They have a 5%, and for certain types of educational institutions, you know, where you've taken the educational loan, which follows under that qualifying amounts. So there it's only a 0.5%. So that's the clear this. So those cases, fortunately, I think will not have to suffer so much. So, but you know, what's the irritation? Frankly speaking, I think is going to be the you know, they're talking about even all your credit card spends in foreign exchange. So today, as I said, you know, some small payments you make, you would obviously be subjected now to TCS. You will have that additional amount coming in. Now, claiming that credit means when you fill up your return, you've got to fill up all those details in your return, you know, about the TCS collected. The TCS may be some 10 rupees, 20 rupees, whatever, you know, minus small things, which will take up a lot of unnecessary time, frankly speaking.
Okay. So from what I understand, Kartik, it's not just about government getting a loan of 3 lakh crore per annum, which you know, for at least a year is not taxed, and then you're paying a substantial interest of 6% from the date you file, which is for approximately 6 months. It's also the fact that it's very cumbersome for an average person to file returns, and also for deductors, people who are deducting taxes. I think it's just unnecessary, cumbersome process that makes the whole thing very tardy and makes, you know, a whole lot of people try to evade taxes.
I have a feeling, you know, this could be one of the sublime messages behind this move, simply because it's impossible for you to keep track of every single transaction and the TCS that got deducted on that. I mean, of course, you're talking about a plethora of paperwork, but that paperwork only for somebody who really has the time and the energy and the wherewithal to collect all that data and all that paperwork.
And one
you travel abroad,
well.
you swipe your card from a metro station to a bus ride to, you know, any restaurant that you're spending in. It's going to be impossible for you to hold on to those bills for a period of about a year or so until you file your taxes, and then make a note of every single entry and give it back to your chartered accountant. And on the other end of the spectrum, we are talking about Saral tax, Suvidha, and you pay your taxes yourself, you pay them online. I think it's a great job for chartered accountants today, because they're going to be back in business as I see it.
And you know, Gautam, please do come in here, but with the lack of awareness about finances in this country, and we know for a fact that there's not a awareness when it comes to filing of returns, when it comes to, you know, timely filing of returns to be particular, it makes it all the more difficult for people to actually claim back, as you rightly pointed out, from place A to place B, and the amount of money that they're spending, and then collect all those receipts and be able to file it back. So a large part of the money, therefore, actually goes to government coffers.
I agree, and I think that is what the government will eventually play with. This is going to be unaccounted money lying with them that nobody puts a claim to.
Absolutely. Gautam?
If I may just correct you over here, see, you know, the way it would happen is that the deductor would be the bank who has issued the credit card, etc. They would be collecting the taxes. So they would be filing their TCS return, and it would reflect in your Form 26AS, which is like your online tax ledger. So therefore, you would download that online tax ledger, and you will have all the details of what is the taxes collected at source. So you don't really have to maintain those vouchers and details, etc. Because automatically, when you make the payment through your credit card, that will be captured, that will be collected by the bank, and they would have to do all the hard work of collating all that and filing the returns and ensuring that you get the credit. So that's the way it would work. So in a sense, once you download your Form 26AS and upload that into your return, then it would all get captured. But it's a hassle, frankly speaking. The larger the Form 26AS, the more difficult it is. And that's the only hassle which will be there. So a lot of people filling up their returns will find it more cumbersome to enter all these, to make all this entry. That's the problem which will happen.
But Gautam, correct me if I'm wrong, you get the Form 26AS only from your bank. And if you're subscribed to a credit card from your bank, these entries will get recorded and matched. But what if you're using the service of a neobank, or let's say, you know, a service like an American Express, which does not operate a saving bank account? You don't get your Form 26AS from those kind of credit card offers, do you?
No, see, the 26AS is an online ledger of the income tax department. What happens is, even if American Express Bank is issuing cards in India, and they are collecting, they will have to collect tax at source. That tax collection at source, they will have to file a return with the government. The government, on that basis of your PAN number, which the American Express Bank has entered in their tax collection returns, on that basis, they will aggregate it against your PAN, and that's how you will get your online tax ledger, which is the Form 26AS. That's how it will work.
And is this going to be applicable even on UPI? Because now UPI acceptance, as we've read, is sort of, you know, penetrating geographies beyond India as well. Now, if you're not using a credit, but if you're actually just using your scan and pay a debit facility, I'm assuming that the TCS is going to be applicable in those instances as well.
Yes, the challenge, I think, will really be for the banks. And that's where I think the finance minister recently, when we were talking about the RBI policy, etc., he mentioned that the banks will have to gear up to capture all this information on the credit card payments, as well as on the debit card payments, you know, whatever, or UPI payments. So all that will have to be captured. It's to be the bank's responsibility to collect that tax at source, because they are the ones through whom you're making the payment. So that's going to be the challenge as to developing the software within such a short period. I think that's going to be the real challenge for banks.
Okay. For the benefit of our viewers at this point, Gautam, what if I'm traveling and I know, you know, my tax liability is different if I'm traveling for educational and medical purposes, but could you please, you know, explain to our audience at this point, if I'm traveling for educational purposes, which is going abroad to get a degree for 1 year, a master's degree perhaps, in one of the European countries, what sort of liability do I have?
So, as I said, if for the educational fees, it will be 5% would be the amount which you would end up paying in most cases, because that's the limit which is there. The 5% for the lower limit is there for so far as this is concerned. But for you, so far as your staying expenses, etc., concerned, so on that it would be 20%. The problem really is that if it's the student who's funding himself, and the student is not likely to have income in India during that year because of the fact that the person is going out of India. So the entire amount will then be really held with the government, will come back to you only after a year. So you would need to fund that additional amount, the 20% on the living expenses or the 5% on the fees, educational fees. So you would have to fund that yourself in addition to what. So therefore, if you're looking around for loans today, you might need to find additional amount to even fund this tax collection at source. That's the real challenge.
So I was just about to come to that. So if I take a loan of 20 lakh rupees to get a degree abroad, the tax will be collected at source by the bank that's giving me the loan?
No, it's when you're making the remittance. So if the bank is making the remittance on your behalf directly to the educational institution, yes, they would collect it. So whichever bank is making the remittance, they are the ones who would have to collect the tax at source.
But just to take Shweta's query forward, Gautam, it seems a little unfair because if you're pursuing an education, a master's degree or something abroad, one of your key expenses to earn that degree is travel and living internationally as well. So exempting the tuition fee but not exempting the travel and stay and other expenses that you incur on account of your education again seems like a major jolt for those who are genuinely going to pursue higher education or for that matter availing of a healthcare facility.
Absolutely, absolutely. It's a big hit to them, I think, because now they need to arrange for additional funding without which they will not be able to make their dream come true.
And what happens, let's say, in the case of, again, I think the cap on that is also up to 7 lakh rupees, right? So,
That's right.
Is 7 lakh actually enough to support any international degree or cover for any medical expenses internationally?
No, I don't think in any way, 7 lakhs is too small an amount. I think in most cases it will be more than 20 lakh rupees, and that's where the real challenge is going to be, because even on 13 lakhs, if you consider a 5%, which is, of course, it's 65,000 in that situation. But your travel expenses, when you add to that, you're still adding, and it is going to be a challenge funding that. That's the whole.
Okay. What about investments made internationally, Gautam? So there was a time during, let's say, between the first and the second wave of COVID, when international markets were looking quite lucrative and you had these fund of funds being offered by so many asset management companies, and there were these fintech platforms sort of enabling you to invest your money in global equities as well. Now all of that also comes under the ambit of LRS and comes under the ambit of 20% tax reduction.
No, I don't think so, Kartik. Where you have a fund of funds, say, which is established by Indian mutual funds, you could have an Indian mutual fund which has a fund of fund which invests in ETFs overseas. Yeah. In that situation, this would not get attracted because there you're not subscribed to foreign exchange. But there are many platforms where you can buy foreign securities directly online. You can buy shares, you can buy mutual funds, overseas mutual funds directly online. Now, on that, you will also have to pay that additional 20%, which will be tax collected at source, and wait for it to be adjusted against your tax liability when you file your return.
Okay. And in case you end up making a loss on the investment that you've made directly abroad, then will that loss offset this TCS in any case for you?
No, Kartik, see, the way it works is, irrespective of whether you earned any income or not, this tax is collected at source on your gross remittance. Okay. So therefore, you would have to pay it on the cost of the shares, whatever is your cost of your shares. You spend, say, 5 lakh rupees on that, you would have to pay this 20%. So another lakh of rupees is what you have to put aside. And that 1 lakh will be adjusted against your overall tax liability, irrespective of whether, if you have, if you've not earned any income, then you will get that back as a refund. But as I said, with interest only from April till the date of refund. But otherwise, you can, if you made a bumper profit, fine, you can adjust it against your tax liability. That's the way it would work.
Okay. And tell me one more fundamental question here, Gautam. This LRS was introduced back in 2003, if I remember correctly, and the limit was set at $250,000 as the maximum amount that an individual with a PAN card in India can remit abroad. Now, in the last 20 years, we've obviously seen the rupee also depreciate drastically, and we've seen inflation across the world rise. Do you think there is an overall merit in re-looking at this figure of $250,000 US?
Kartik, no, the limit was $25,000 when it started off in 2003. So it was $25,000. Then what happened is it went up to $75,000. It went up to $1 lakh dollars, then $200,000. Then there was this crisis which came in 2012. There was a foreign exchange crisis in August 2012. The limit was slashed to 75,000 from 200,000, slashed to $75,000, and all sorts of restrictions. Now remember, initially LRS started off saying that this is only for capital account transactions and not for current account transactions. So expenses such as travel, such as subscription, etc., all those were not covered by LRS. So they were in addition over and above, your LRS limit. Your LRS limit was only for capital account transactions. In 2013, when they restored the limit from $75,000 to $250,000, that's when they brought in all these restrictions, and they've said, okay, this $250,000 is both for your current account as well as your capital account transaction. So it will be for your travel, it will be for your education, it will be for medical, besides investments abroad, etc. So for all that put together, this limit is of 250,000 is there now. So that's the way, so therefore it has undergone a change over the years. And secondly, if the dollar appreciates, still, you're paying more rupees in terms of it. So really, it doesn't make a difference in that sense.
Okay. And one final trick question. What about cryptos? They're still not legal, neither are they illegal in India, and you really don't know who you're paying and how that money is getting remitted where. So how does it pan out in the case of somebody maybe, going to an Indian crypto exchange and investing?
See, so far as Indian crypto exchange is concerned, there is no problem. The problem is if you want to trade on a foreign crypto exchange, that is not permitted under LRS.
That's right.
So therefore, that's something which therefore this TCS would not apply to it. But Indian crypto exchange, of course, you have other tax provisions where they said that your gross gains would be taxed. You will not be able to set off your losses against the gains, even though you made losses in crypto, etc. So, so there are all sorts of issues there. So they're really trying to discourage people. I mean, the government seems to feel that crypto is a form of gambling in a sense, and therefore, in fact, worse than gambling, because in gambling, it's only your net gambling income which is taxed. But in crypto, it's your gross winnings and without setting off the losses, which is taxed.
Right.
So, I think...
Okay, wonderful. Thank you so much, Gautam, with all those details that you just shared. Remember, it's an important story that we're tracking. TCS on foreign remittance has been now hiked to 20%. It was 5% until recently. It's a new innovative way for the government to make money.
I'm just glad, Shweta, it kicks in from the 1st of July because I have an international travel planned for the first week of June. So I think I'm going to narrowly miss this. So in case you're planning your holiday, maybe do it in June or earlier.
Absolutely, do it in June. Let's move on. Another important story that we're tracking, the telecom sector in India is clearly heading towards a duopoly, or is likely heading towards a duopoly, with Reliance Jio and Airtel fortifying their positions as the top two operators in the country amid a rapid fall in subscriber for Vodafone Idea. Now, Jio and Airtel are steadily gaining users at the expense of loss-making Vodafone Idea, which has been unable to compete with its financially stronger rivals despite merging in the August of 2018. Joining us at this point in time, Lloyd Mathias, who's a business strategist. Also with me, my colleague Kartik. Let me come to you, Lloyd. Does it look like there is a monopoly here at the top corner? Because we are given to understand that Vodafone, despite its fervent efforts to remain in the game, and despite government infusion of money, it seems that it still continues to lose its user base.
Hey, thanks for having me on the show, Shweta. I think you're raising a very critical point because I think we're moving in the direction of a duopoly. While on paper, clearly we have four players, we have Airtel, we have Jio, we have Vodafone Idea and BSNL. I think in terms of sheer customer acquisitions, if you look at the last 18-month timeline, I think the additions are really coming across really fundamentally to Jio and to Airtel, and largely at the expense of Vodafone Idea, to some extent BSNL as well. And that, to my mind, is a dangerous duopoly. The moment you have kind of two well-entrenched players with deep pockets, I think then consumer interest starts getting hindered. And if I just pick two global examples, the US and Singapore, I think even such advanced markets like the US and Singapore have at least three viable players, right? Whether it's AT&T, Verizon, and Sprint in the US, in Singapore, you've got the three players. I think it's always good for a kind of competitive, and India's telecom has reached this wonderful spot because of competition, sometimes intense competition, like we saw in the 2007 to 11 period when there are 13 operators. But I think anything less than kind of 3 viable operators makes for a tight position, and consumer interest gets hindered in the long run.
Okay. Do you know, in a vibrant and emerging country like India, what is the prime reasons for telecos losing business?
I think that the loss in business is really coming in a sense from one quarter, Vodafone Idea. And I think that telco has been beleaguered in a sense. In the last 3-4 years, they haven't really been making significant investments in improving their infrastructure. In fact, if you look at the whole 4G adoption, they've been the slowest off the block. They've been struggling to pay off some of their existing dues. I think the AGRs are building up. The government has been kind of infusing a few sops by taking equity. Now, technically, the government has more than 30% of the Vodafone Idea entity, right? So both the Aditya Birla Group and Vodafone Incorporated are, in a sense, smaller owners of the Vodafone Idea. But I think just the lack of sheer investments is what's beginning to hurt consumers. For subscribers, you really want a great seamless service. And there are subscribers who are worried about the quality of service they're getting, the quality of their connections. And these subscribers are willingly moving either to Airtel or Jio. And BSNL has been more, you can say, a silent player working out of the full public sector, but really no real growth being driven. So I think until you have a really competitive industry where 3 or 4 players are fighting hard, lowering subscriber rates, improving quality of service, bidding aggressively, I think that's when an industry becomes vibrant. Beyond that, it's always a bit of a challenge when it comes to consumer interest.
Okay. I also want to talk about cheap data at this point in time, because that seems to be cutting down on the revenues of all the major telecom players. In a country like India, where data is so cheap and there is a high competition to get as many consumers as you can, what sort of impact does it have on the long-term prospects as far as consumers is concerned? Do you think data is going to be more expensive going forward?
I fear for that. I think some of the big growth that's come in India over the last 5 years, post the pandemic and clearly post Jio's arrival in 2016, has been driven on the fact that India offers the cheapest internet data in the world. Right? We're already talking of 25 cents for the GB, and that the average Indian now consumes close to 25 GB a month, which is incredible. But sitting on top of that great data grab are a range of digital services. Right? So everything from what the government has done, the JAM Trinity as they call it, right? The Jandar, Aadhaar, Mobile Trinity. The fact that we've got some of large global platforms, right? Whether it's the Amazon, the Flipkarts, the Ubers, the Olas, the Swiggis, the Zomatos. I think all of this sits on the fact that India has this deeply well-penetrated internet user base. And I think that's really come at the back of cheap data. The moment data prices start inching upwards, I think it's going to affect not just telco services, but a range of digital services, some of vital public interest. When you talk of a lot of the government services that get enabled through digital infrastructure, I think that's impactful. And I truly believe, Shweta, that one of the biggest things we have to be proud about is our great digital stack, which has been built on the back of this cheap data, but also on some great kind of founding pillars, right from the Aadhaar to the, the Jandan, the bank accounts reaching close to 750 million Indians.
Okay, stay with us, Lloyd. We also have Kumardeep Banerjee, who's a telecom analyst, joining us in the studio at this point in time. Kumardeep, before I go to the larger telecom picture, I want to talk particularly about Vodafone and how Vodafone is bleeding, losing its revenue market share in the financial year 20. And I'm going to give data here. It was 27.1%. It is now down to 17.3%, while Airtel and other competition, Jio in this case, their revenue has only been increasing. What's hurting Vodafone, and how likely do you think it's going to continue to bleed if it continues to bleed like the way it is?
See, so here is the point that I really don't want to comment on Vodafone as per se, because I'm ex-Vodafone. Okay. So that's a disclaimer here. But having said that, there are a couple of reasons. The market has undergone a severe churn. And as my dear friend Lloyd was also mentioning, and hello Lloyd, good to see you, meet you virtually. My dear friend Lloyd was also mentioning a short while back that the technology has undergone a substantial change in the past couple of years. First was 4G, and now we have seen the incoming of 5G. Plus also remember that the company Vodafone has undergone an amalgamation merger. They have merged with another telecom company. So when two giants merge, then it takes time for things to settle down. So it would be wrong on my part to predict how long will the bleeding process continue, but yes, the numbers do speak for themselves. We have seen the customer base as well as the market share depleting number of quarters, but I think that these are market forces at play, and at some point of time things will stabilize. I remember a time a couple of years back, 4 or 5 years back, when we were looking at a situation when one of the leading telecom operators, their promoters had made this famous quote that the market will stabilize at 30%, 30%, 30%. So 30% with player A, B, C, and then the remaining with whatever player is left in the market. But we are slowly moving in that direction. So even if you look at the overall market share, this is how the situation will pan out in some time.
Okay. As an ex-Vodafone person, since you put the disclaimer out there.
I do have to. I should.
What's hurting Vodafone at this point in time? We know that rollout of 5G has been slow, especially in rural areas. That could be one of the reasons why it's hurting. People continue to port. You know, we were just discussing before we started this segment that people continue to port. Active users like even me for that matter, who have been Vodafone customers, continue to port. What exactly is Vodafone not doing correct? What it can do better? Let me rephrase this.
So I think let's not put it on Vodafone, but let's say that every telecom operator today needs a massive amount of money to be sunk into telecom infrastructure, because 5G is a completely different technology. They need to put money literally into the ground to connect and to build up that faster network architecture. And as we are talking about 5G, we are already mulling about getting onto 6G. That's a different architecture that we are talking about. So when a new architecture comes, I don't know whether you have seen the data which has come out from the Department of Telecommunications as of March. The data has come out in April, which states how many sites have been made active by 2 of the players. Maybe Vodafone has not put up sites, but I must put a disclaimer. I must mention here that Vodafone, with Mr. Kumar Mangalam Birla now coming on board of Vodafone, it seems like things are going to take a step ahead. There is going to be a boost in investor confidence. Now, when that happens, hopefully there will be more money, and that money needs to pure play get into capital expenditure, which is like literally putting money in putting up sites. They already have taken up or have spectrum for about 13 circles, as far as I remember. That's the 5G spectrum they have got for 13 circles. And in order to fulfill the licensing conditions, they might need to roll out and make 5G services live in a couple of locations. I'm not too sure about the numbers at this point of time, but they need to put up or make those sites live in the next quarter. With the money, with the investor confidence coming back, hopefully they will have money to sink in that kind of money and get their 5G network in place.
Okay, and you know, talking about the overall telecom sector at this point in time, could you draw us a comparison of where the top 3 players stand when you compare their revenue market share up as opposed to their customer market share?
So that's really a very technical question. So as far as the revenue market share and the CMS is,
are they in sync? Let me ask a broader question then. Are they in sync?
See, it's a difficult question because not all of them are listed.
Okay.
So the numbers that you get are some of it maybe what the company wants us to know. Some of us maybe what the numbers need to be analyzed. So it's a difficult question to answer. Where do they stand as far as CMS RMS numbers are concerned? But having said that, if you look at the funding pipeline and the way the networks are being rolled out, well, the market forces do say a lot about the financial health of these companies.
Okay, and let's talk about the market forces. There are a number of reasons why telecom companies, you know, are doing the way they're doing. Aggressive 5G rollouts to penetration to more, you know, capital expenditure. How do you see telecom sector panning out with these top 2 players, especially Jio trying to bleed out the other players?
Again, those are leading questions, but let's say that, I mean, you know, 5G is here to stay.
Okay.
And whichever form, whether it's 4.5G or it's 5G or 4.75G, we yet need to have the proof of the pudding. And proof of the pudding lies in having it. I don't know which part of town you stay in, but depending on where you stay, most people in any area, whichever network they are in, would be complaining of network failures, of call drops. It is happening all across all networks. Now, there is a reason why it is happening. The reason is that there are a couple of reasons. One could be that there is a transition element involved, because many operators are shifting from 4G to 5G, or trying to move a substantial part of the customer base from 4G to 5G. At this point of time, if you ask me, and as if I heard Lloyd correctly, he was mentioning that the technology is needed for pushing through government's key digital themes or digital policies, which includes the digital public infrastructure, which is going to be, or which is turning out to be, one of the biggest success stories coming out of India in the past decade. What is the digital public infrastructure that we are talking about? We are talking about a unique identity platform through Aadhaar, or a unique digital identity through Aadhaar, which is making welfare schemes of the government possible through digital identification. We are talking about riding on that architecture, we are talking about the Unified Payment Interface, the UPI, which is 8 billion transactions per month. That is the largest number of digital transactions happening on the planet as of now. And you know that the transactions go down as low as ₹2. I made a payment of ₹4 yesterday because I forgot to. I mean, yeah, that's a story.
Change in your pocket.
No, because I didn't have the money.
Who carries cash?
Yeah, ₹4, and at the last level. Even if you go to a village, you will find. I mean, you have seen visuals of those dholwalas with UPI number printed on their dhol, or on their band, for making the payments, shaganka payments, as they are called. The third is, of course, CoWIN, which is the digital identity architecture through which most of the healthcare facilities are likely to be rolled out. And there are multiple. Then there is the open ONDC network, which is basically democratizing in a way the e-commerce sector. And then there could be multiple other utilities which can climb, or which can come on top of this architecture, one above the other. So what I'm saying is that this technology, all these technologies, are working in the existing technology, which is the 4G or the 4th generation mobility technology on any smartphone. So as long as the 4G technology is robust, we might need 5G technology for moving to a faster network zone, but those will be more for machine-to-machine communications and for AI kind of applications.
And quantum computing, which has just come back into vogue. And
I mean, one of the examples that we used to give was that, how long do you think, let me ask you a question, how long do you think before you think an self-driven car would be a possibility in Chandni Chowk area?
Not in my lifetime.
It's a very far-fetched idea, very far-fetched idea.
Why do you think so?
Because of the congestion in the area.
But that is the that's
how much will you teach the machine technology, is the point. Machine learning is great. How much will you teach the machine? It's difficult to teach a human being how to drive in Chandni Chowk.
You know, we've had instances where a self-driven car could not drive in well-connected roads with very little to no hindrances. We're talking about Chandni Chowk, where you'll find every person at every inch. I mean, it's such a...
But we saw the Bill Gates video, right? We saw the Bill Gates video sitting absolutely tight in the front seat of a car, which was pretty much driving on its own.
Okay.
So it's not that far. But yeah, it's impossible to teach human beings how to drive in Chandni Chowk, not for their own,
you first teach
machine,
human beings
but for the surprises that can pop up from any direction.
There you go. So as long as the existing technology, that is the 4G technology, is doing good, we are good. 5G will come. I mean, I don't think that there will be too many human users for 5G as much as there would be for machine-to-machine communications, for talking to your fridge, for making to a smart home, making your city smarter, those kind of stuff. So that's the way technology, that's the way telecommunications is headed.
Okay. Let me come to Lloyd. We can see him right here. Lloyd, you've written extensively about the need for a three-player system in telecom business, moving beyond duopoly. Nobody likes a duopoly. As consumer especially, I would not like a duopoly. I would need more variety to choose from. What do we really do to ensure that it's a three-player system in telecom business?
Yeah, I'd say, Shweta, three at the bare minimum. I think what has got us here, and as Kumar rightly outlined, is that the fact that there was intense competition drove data prices down. The fact that Jio played disruptor kind of really made India being the best place for data in the world in terms of pricing. And that has enabled a whole ecosystem. And I think what we're not talking about is also livelihoods. I read a data point that said there are 4 crore Indians, 40 million Indians, who kind of gig work, whether you call them delivery boys for Urban Ladder, Amazon, the works, Uber, Ola, etc. And a lot of their livelihood depends on that mobile phone, right? And the cheap data, in a sense, enables a livelihood. So I think the real elephant in the room, which I guess we need to get at, is what's the government's take when it comes to BSNL. You're talking of, BSNL that has 65,000 employees. That's the big red herring. At the same time, bleeds about 80,000 rupees a year. That's what they owe the government in AGR every year. Now, does this continue, or does at some level the government kind of enable a third or maybe a fourth player? The fact that Vodafone Idea is sitting pretty with still about 20% of the subscriber base, and there's BSNL. So I think effectively we need at least 3 to 4 economically viable players that don't run the risk of running up NPAs with banks. At the same time, they're able to compete effectively in the marketplace. So consumers get quality service. They're able to make investments in newer technology for 5G and beyond. And importantly, they kind of keep each other's pricing on check, right? So there's the moment someone's taking the price down, other two kind of balance it out. Right now, we're in this funny situation where, I'm not making any kind of illusions, the fact that two players can gradually drive the market prices up. Now, while it's in a few paise, we may not notice, but I think the moment we're stepping up beyond where we are, I think we run the risk of a whole lot of people falling off the telecom map. Right? Today, we talk about 750 million for internet users, right? Out of which about 500 million have transacted, as Kumar said, through UPI or whatever form. I think the moment that starts shrinking, we lose a little bit of our growth momentum. And I would say the government's objective should be in the next 4 years to get to 1 billion internet users in India. That's going to enable a lot of stuff. And the only way that can happen is you can have at least 3 viable competitive players. I think that's the single line kind of recipe the government has to follow.
Okay.
I think the larger question here is how will you expect the government to really ensure that there is a third viable player? We've already seen that the government has sort of, helped bail out Vodafone from its debt situation by converting that into equity and ends up owning about 30%. The point is there has to be fresh capital infusion. Just getting rid of liabilities is not going to be enough. There has to be fresh capital infusion for any third player.
Okay.
I think a larger question is, are we heading towards a duopoly? Now, it's irrespective whether the third player would be a BSNL or a Vodafone or somebody else, a new surprise springing up. The question falls back to the fact who has the deepest pockets. And I think no guess is there. It's very easy in a duopoly for a Reliance to also have the potential to bleed out a Bharti Airtel in time. We've seen, the fight for ARPU has been going on. Players have been able to increase their ARPU significantly, 17% to 22% being the range. But the point is, how do you increase your ARPU? Are you making your data more expensive, or are you making your entry plans higher? So Airtel, for example, has made, let's say, the 99 rupee prepaid 28-day validity pack, taken it up from 99 rupees to about 149 rupees, right? It's a good 50% jump. You're offering more data. So data continues to be cheap, but you're increasing your ARPU by making the lowest entry a little more expensive.
Okay. Falling back to Lloyd's point, does that somewhere, bring in the fears that you're throwing people off the telecom map? And Kumar, maybe you'd like to come in here at this point in time by making the entry data pack more expensive. Are you devoiding people of cheap data that India takes a lot of pride in?
Actually not. There is still a lot of room for India to still be the cheapest data market in the world and increase the prices a little bit more. It's just a matter of I would say the marketing guys of these telecom companies as to how they come up with those pack plans, as they are called, or as Kartik was mentioning, as to whether they increase the entry barrier or the entry point by about say $100 or $50, or do they actually go ahead and increase the price of per GB of data. Now, that's something which these guys do it smartly, and I am sure that there are ways of doing it. But more importantly, there are other ways of making money. It is to get the consumers to be hooked on to a good network. The amount of time the consumer, the user spends on your network is money. That's something that they can always work on, and that requires a very stable, robust network, no matter which operator you are.
Okay. So, Kumar, I have a very fundamental question. Whoever the third player may be, if you're saying we are potentially not heading towards a duopoly,
we are not.
Lloyd is saying we are possibly getting there, and it's going to take a lot for a third player to not let that situation happen, or for the government or the Competition Commission of India to not let a duopoly happen. You have a Geo which has gone beyond pure data, pure telecom into great value added services. Where are you watching your IPL matches, right? Or where did you watch the World Cup?
That's right.
Right. Similarly, Airtel has got a great robust broadband connection in addition to wireless. It gives you the landline virtually for free. It's got the Airtel Extreme. It's got the OTT aggregation apps. So just investing in pure data infrastructure, to my mind, is not going to suffice for any third player to survive. BSNL, because of a large government base, because of a base outside of the metros where perhaps broadband has still yet to penetrate the way it has penetrated in urban, will continue to survive. But for any other viable third player, you need this value addition to grow in addition to putting up towers and putting up data offering possibilities.
So I completely agree with you. That's
so
what I was hitting.
How does a third player do that? The amount of investments we are talking about with all of this combined becomes huge, and there doesn't seem to be a viable player ready to make those investments in India right now. Which brings us back to the possibility of a duopoly or fringe players existing when the prices get defined by these top two players, and eventually a possibility of the top player bleeding out the second because he has deeper pockets. So where does it leave Shweta, you and me, when it comes to our data prices, let's say 3 years, 5 years from now?
I mean, that's a long time in telecom's history. 3 years, 5 years of now.
But you do think it's a long run.
If you are looking at 5 years horizon, believe me.
Will we have a viable third player in 5 years?
If we are talking about a 5 years horizon, suffice it to say that there will be a new technology which will not be based on this
who is going to be the early adopter of that technology? Obviously, the guys who have the money, the guys who have the consumer base.
We are talking about Spectrum Starlink kind of services. We are talking about mobile or any kind of telephony which works 50 kilometers below ground.
Who's going to be the early adopter? A guy with money, the guy with deep pockets is more likely to move into being an early adopter.
There are nimble solutions available. So which brings me that what stops us from saying and thinking, remember what Lloyd said. He said that India has got 750, I would say 800 million active, let's say, internet users, out of which say 500 million would be active on the internet, mobile internet users, to be fair. Government's aim and stated aim is that within a year or so, it will go up to 1 billion.
Right.
That makes India the largest mobile broadband market in the world.
And hence more dangerous if there is
therefore
one
hold your thought. Therefore, isn't it a lucrative market for one of these content or one of these new age technology players to come in and pick up what you call some legacy spectrum, some legacy BTS sites, and some offices lying here and there.
Right.
Put them all together and use that as a giant content factory. Because what you were mentioning,
this trend line has been visible for a while.
Yes.
We've still seen companies like Tata Docomo getting out of the market. Many other, I think you mentioned the figure of 32 when we spoke earlier today. There were 32 telecom operators.
Yes.
The trend line going up has been visible for decades. And we are still faced with a situation where there are two players thriving and no real avenue for a third player to really rake up its market stake.
They will. Let's wait and watch the game.
You're optimistic.
I'm optimistic.
Lloyd, are you optimistic?
You know, just one quick point I wanted to make. One is the fact that last year the government infused 35,000 crores into BSNL to keep it going, right? And to my mind, BSNL is the other kind of sordid story, like airlines, Air India continued forever. The fact that in a pre-election the government can't take a hard call, but to keep infusing 35,000 crores in a loss-making organization, which technically has the best access to spectrum and infrastructure, is a bit of a mug's game. But this
is taxpayers' money, Lloyd.
The other
this
point
is
that I heard
taxpayers'
Kumar
money.
make, and I just want to just react to that, is that we talked about a 50 rupees increase and a gradual growing of data rates to raise ARPU. I think that's where the bottom falls off the mark, right? The 50 rupees doesn't mean much to most of us in the studio, but 50 rupees really means that 4 rupee thing that you buy or that 20 rupee nariyal pani, that guy can no longer afford a connection. And that's when the market starts going down. So my concern is that we really have to watch for that long tail. Actually, when the number hits a billion people, and all billion of them can transact in between making a 2 rupee transaction. I think that's what we should gun for. That's when the nation benefits. That's when the economy benefits. That's when the GDP goes up. The short term of growing ARPU is obviously a big concern for Mr. Mittal and Mr. Ambani. I think there's a larger national issue at stake. Sooner than later, I think the government has to address that elephant in the room.
Okay. Sooner or later, the government will have to intervene. Lloyd Mathias, Kumardeep Banerjee, thanks very much for joining us, gentlemen, with your inputs. And Kartik Malhotra there. Thanks very much for joining with your inputs on that story. We will, of course, continue to track all developments in the telecom space. But that's all we have in this bulletin for today. Thanks for watching.